Welcome back to the channel, Crypto Trend Trader, with a quick update on the S&P. But before we get started, I'd like to remind you it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. I got no problem doing any updates or like analysis on any particular like assets, stocks, cryptos, whatever. It's obviously not financial advice, but I'm more than willing to check them out. A lot of them I probably already check out on my own. So if there's interest in anything in particular, I don't mind taking a look. So just let me know in the comments or whatever. But here's the S&P 500. Here's actually a reminder though, because I know most of you guys have not been around since the very beginning, because this video was from like 7 months ago and got 61 total views and 3 likes. But this is my S&P video, and honestly there's a comment on here from this dude talking about how like I'm basically like an idiot and everybody knows the S&P is going to 40,000. So here's my video though, and then we can do the analysis. You got to suffer through it.
Hit the first resistance, hangs off, comes to the second resistance point, and then we put in a new high. And this right here, that's our spring. This is the up thrust after distribution. And the whole purpose of this right here is to trick the entire market into thinking that we're going to higher prices. We just broke out. And what happens? You just got caught in a trade. And as soon as that up thrust after distribution fails, we dump straight down. We come down immediately to the 50. We did actually find a little bit of support. It wasn't immediately. We come down to the 50, and then you'll see that's where we were kind of consolidating. There's a little mini distribution phase going on right now. We're going to try to punch up one more time, and when this fails, we're going to dump. And it's going to come down. That's going to give us, essentially, we're going to be entering phase D. We're finishing out phase C right now. We're about to enter into phase D. And phase D is where it gets bloody, because people are going to realize, this is not, we're not going to higher prices anytime soon. So what's going to happen here? We're going to dump down. We're going to find support at the 200 moving averages. When we come to it, it's going to line up almost perfectly, because they're still going to be coming up powerfully. Before that happens, actually, we'll definitely bounce around on the 90 here. So we'll come down to the 90, we'll bounce a little bit, we'll come back down to the 200, and look, the 90 is going to start curling over. So we're going to bounce off the 200. It's going to take us right back over to the 90 here, and then we're going to find that as resistance. It's going to dump down. We'll probably dance with the 200s a little bit, but it's going to go straight through them. We're going to hit that same low from before, and when we punch through that to a lower price, that's going to be our sign of weakness in phase D, and that's going to let people know this is it. So when we get the powerful bounce off that second support, it's going to come up, and we're going to hit this old support that's now going to be resistance, but we're going to punch through it, and by then, that's right where the 200s are going to be at. So we're going to hit that 200, fail to break above it, come back down here, put in a lower high, and then after that, it's finally going to break, and we're going to get marked down. We're going down here. After that, it's tough to put targets out that far, but I think it's very likely that we're going to just come right back down to this old zone at about 1825. So,
all right. I mean, you can go back and watch the whole video if you want, but let's just kind of look at this price action and see. Obviously I'm on the weekly, so you're not going to see like the mini breakdown of everything exactly, but we basically came down to the 90, got the bounce, or 89, fell through it, came down to 200, got the bounce initially, fell straight through it, came back up, got rejected by the 200, just like I said, bounced to 377, came down to the 528. I mean, come on guys, bounced it straight back to the 200s. So what do we expect to happen right now? I mean, let's see. If I'm going to be right on this, I would expect us to come all the way down here to the 786. You know what I mean? And tag that next target. I mean, we literally, oh man, did we actually already get it? Oh, I mean, you could count that honestly as already you really got to count that as already having happened right there. So when that bounced back up to 200, so now at this point in time, basically, you got to just count on that continuation down here. I mean, unless that was the bottom, if that was potentially the bottom, that's great. But it looks to me like it's just going to continue playing out. I mean, I really don't even need to do TA again, because that same video is still like exactly relevant. I mean, it's hard to tell on this weekly because it happens so fast, but it basically just dumped straight down to this, came back up to the 200s, and what I would expect to happen is us to get rejected and then dump down lower again. Because all that was basically, and you can see how I have it on here, it was one wave down, 2 is a retracement of the dump. So 1 is the dump, 2 is the retracement back up of the dump, and the attempt to cross the short moving average back over. When that fails, we dump back again, and this is wave 3. So it's 1, 2, wave 3, and then 4 is the retracement of the dump. So where did it come down to? It came down to the 377, and then when it gets the bounce right here, it comes exactly back up to the 200 simple and 200 exponential moving average. And that's why I like to keep both of them on there. You never know which one's going to get more respected. So as soon as it gets the bounce back up there now, that's our 4 completed. That's it. We just completed the 4. So what I would expect to happen right now, we're going to come down for the 5, and we're going to sell back off to a new low. Yeah, we did. Look at that. We tagged it like literally perfect. And it's not, I mean, I have never seen anyone else use this moving average before ever. So, you know, people can say whatever they want, but eventually people are going to start using this moving average because it works. And it's all like multiples and Fibonacci, and that's how I come up with these specific moving averages. I mean, a lot of them are common, like the 200 and the 21 and stuff like that, the 50 or 55. But like the high ones, and like I choose like my short level based on moving average, or moving average based on Fibonacci. I mean, it's all, there's a reason that all this stuff works. It's not, it seems like magic at first, honestly, when you first discover it, but just like magic, once you realize how it works, you're like, okay, it's still very impressive, but much less impressive because you understand like the mechanics behind the moves. So basically, this is what I'm expecting on the shorter time frames. We got the sell down here, we came up, and then we started selling off right here. So essentially what happened was we attempted to, the first time when we bounce up, we attempt to break above the short-term red moving average. We fail, so we continue to sell off. And then when we come up here, we get above it but sell back off, but that's an indecision candle, so we actually get the continuation. And then we get rejected this time, not by the short term, but by the yellow, the second shortest moving average. And then when we come down, we would expect obviously to find support now on the moving average that we broke above. But if that fails, and also obviously this is like a key support line, this green one right here, from like, if you watch that old Wyckoff distribution video, this is like our initial automatic rally point. It's the bottom. After we hit our buying climax, we come down, and the first point that we like find support on, which is in this case the 200 moving averages, that there we get like the automatic rally off of it. That's going to be our first support point. And then we'll go up, and then when we sell back down and break through that support point, we basically come down, and it's like a sign of weakness, like support. It shows the market, oh, we put in a new low. Everybody gets scared and, you know, capitulates, and then we get that massive V bottom out of there. So essentially that's our two supports now, the green and the blue. So the first time when we came down here, we actually came down to the green and got that bounce up off it, and then it failed. We couldn't even get back to the moving average. And then we came down again, and you see we were finding support on the blue. It was like saved with a wick, and then dumped down. And then after we got the close below it, we got the continuation. And that gave us, you can't really see it on this time frame because I'm on the daily now, but that gave us down to that weekly moving average like I was talking about. And again, you'll see it corresponds specifically, obviously, with the 786. So it got front run by like a couple dollars. I mean, I can get my tool, but I mean, if I'm calling moves within $43 and 2%, I mean, I'd say that the technical analysis is definitely working. So I mean, not to like toot my own horn or anything, but I literally spelled out all this price action exactly. And that was in August. That video was in August. So what is that, about 7 months ago, we said? Yeah, so 7 months ago I called the stock market crash before it happened. I didn't call it 5 years ago. I haven't been saying it for 10 years or 3 years or 2 years or 1 year. I mean, I called it literally like a few months before it happened. And I didn't call it with magic. You know, I used like analysis of essentially like world markets. So for all the people who say it was a stock market was strongest it's ever been, yeah, technically on paper it was. Technically, it was a hollowed out stock market, which is obvious now when you look at all these companies that essentially had nothing behind them, you know, and only were surviving based on like momentum, because otherwise they wouldn't need bailouts. But I don't even want to get into all that. I'm not trying to get into like the whole technicals of it, and you know how crazy this whole situation is with like the American bailouts. Because essentially, if you run a company, this is what kills me about it, is they want to bail out the airlines because we need airlines. Okay, yeah, we do need airlines, but this is what happens when in actual capitalism, in business. Okay, one business goes under, and then they sell all their assets for like dollars, pennies on the dollar, essentially, like at auction, and another company buys them, and then they get stronger. So whichever companies are like strong and able to survive through tough times, or like well managed, or didn't do like, you know, ridiculous amounts of stock buybacks so they could pay out like crazy dividends to like hollow out like trillion-dollar companies. But anyway, if they didn't do that, they would be able to like survive a couple months or, you know, a year of no income or downtime or whatever. You know, it's not going to be easy, but you'll survive. But, you know, obviously they didn't do that. Everything was euphoric. And now here we are, you know, getting like trillion-dollar bailouts, record setting. And, you know, nobody saw it coming. There was no way anyone could predict any of this. I'm pretty sure I even make a video about a Black Swan event, about a about like a pandemic sickness breaking out. I'll have to look back and see if I can find that one. It was back in the beginning, but you know, it was before I got into as much of that stuff and kept it more on the technical. So, but yeah, anyway, I mean, you see what it is, guys. I mean, it's very clear what levels are getting respected here, and you know what's happening with these charts. And I would expect it to continue happening. The crazy thing about this situation is you know our like absolute top was like middle of February. So I mean, this has not been going on for very long. This has been going on for basically a month right now, like from the top to like the dump. So I mean, they're calling it finally now a recession. So after a while, if it lasts a certain amount of time and there's a certain amount of sell-off, it'll get like upgraded or downgraded or whatever to a depression, unfortunately. But at that point in time, or even if you want to call it a recession, I think the average recession lasts between like 6 and 18 months. So we sold off for 1 month. So I think the likelihood, based on like technicals and the average recession, I think the likelihood that you know, we've bottomed out is very unlikely. Even the upthrust, like the initial one, you know, what was that? That was September, mid-September 2017, to the bottom was December 2018. So that was like over a year for that sell-off. So we're 1 month in. So maybe it got accelerated because of the virus, but did we just trim off 11 months? I don't know, man. I don't know. I think it's much more likely that this is slow and drawn out, and that we do in fact come down to here. And God forbid I have to draw a fib from down here. I don't even want to. I'm not even going to do that right now. I refuse to like even fib from down here at this point in time, because that basically just means like, you know, the economy's crashed and the dollar's done. So I refuse to do that at this point in time. But yeah, you see what it is, guys. I think honestly, I use this analogy in one of my videos, or in one of my comments, about people wanting to buy back in, and I do understand there's like a nice bounce and everything, but you know, essentially like the whole economy's shutting down. There's mass bailouts coming in. There's like too much craziness going on right now. So I feel like entering in the stock market right now, you know, or you know, most markets is essentially gambling. You know, if you don't have a specific edge on the market or specific like reason to believe that something's going to happen. So you know, again, I'd say we're going down now. I would expect us to continue going down until we don't. And if we switch over to like the weekly time frame, once we crossed over basically like the weekly moving averages, short-term moving averages, you know, that was basically our dump. And then this is essentially just like the reaction rally. So could we come all the way back up to like the 89 and try to like get back above here? Yeah, I mean, we could literally come back up to like 2,900. I mean, we really could, but I don't think it's likely. I mean, we'll see though. Who knows how this quantitative easing and all this stuff's going to work out. So, well, there you have it, guys. Quick little update on S&P traditional markets. If you want to see anything else in particular, just let me know. And I do appreciate all the support and interactions lately. And you know, take the time to go back and watch some of my old videos. Like I said, there's lots of stuff you can learn in there, and a lot of those charts and everything are still relevant. And if you want any of them, just holler at me, because I still have, like, you know, this is like my old chart, obviously from way back when, and it's cool to kind of see how it progresses over, like, you know, a month or 6 months or a year, or you know, see how it ages in a couple years. Because you know, go back and look at the comment in that video. I'm not going to call this dude out, but he's basically just saying like, yeah, you're putting your credibility on the line. You're not saying maybe this is going to happen. You're saying definitively and all this stuff. And you know, it's kind of funny in hindsight, because it's like, you know, I get to look back now and laugh about it. Maybe it would have worked the other way. Maybe he'd be trolling me right now. So there you have it, guys. S&P 500. I'm Crypto Trend Trader, and I'm out of here.